Hello everyone. This is the pre-market report video for today, April 11th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, for the sixth consecutive session, our Indian market closed positive. However, after a really volatile day, it closed slightly on the negative note. Market was mainly supported by auto, IT and pharma. Other than these three, including banks, most of them closed negative. We discussed this in yesterday's pre-market video. Auto sector was mainly supported by Tata Motors during the weekend as JLR released the press statement that their quarter-to-quarter sales increased over 20% and analysts predicts that this will create the positive cash flow of over 8,000 crore rupees. So remember this, when Tata Motors announcing the results in May, it has to generate at least positive cash flow of $1 billion US. Since at present the stock price adjusted to that. For example, today alone it increased near 8% but settles around 5%. Other sectors such as IT and pharma, it just short covering before its result season starts. It's same for banking stocks, just profit booking made them to fall. Moving on, yesterday both FII and DII were net buyers. FII net bought shares worth approximately 880 crore rupees while DII net bought shares worth approximately 350 crore rupees. Roughly in total, together they net bought for near 1200 crore rupees. As we discussed yesterday, most of the European market were on holiday due to the Easter. Then after our market hours, all three US major index opened approximately 0.5 to 1% negative. But in the end, all of them recovered its losses. On Thursday, US government announced new jobs addition for the March month. Then on Friday, they released the unemployment data. I don't want to repeat and bore you guys since we discussed enough in detail on the last pre-market video itself. Regardless, this made the Fed watch tool to give over 70% chance of a 25 basis point increase in the US interest rate in the next month's FOMC meeting. That itself, it's very negative. In addition, a US based marketing firm released the statement that compared to previous quarter, Apple shipped over 40% less personal computer. This severely dented the sentiment and made all the tech stocks very negative, especially Microsoft, Apple and Google. Moreover, sentiment on tech was also hurt by the rise in 10-year bonds as it's now moved near 3.42 compared to less than 3.3 last week. Is it all negative? No. At present in US, both jobs data and unemployment data showing very good economy. So, the economically sensitive sectors such as transports, semiconductors, small caps and heavy industrials outperformed the broader market, hinting that the economy is strong enough to withstand further rate increases from the Federal Reserve. Semiconductor stocks such as Micron Technology and Western Digital Corp gained over 8% in one single day. Basically, semiconductor stocks offsetted the loss made by the tech stocks. Anyway, at the end of the day, Dow Jones up by 0.3%, S&P 500 up by 0.1% and Nasdaq down by 0.03%. But all this drama increased VIX by 3% but it's still under 19. On the tech stock world, only Amazon closed positive. Coming to Indian ADR in US market in conjunction with Indian market, both Infosys and Wipro ADR in US market closed positive of 0.5 to 1% and regarding banks, it closed really negative of over 1%. About SX Nifty at 3 am Indian Standard Time, it ended the trading at 17,699 which is kind of indicating relatively flat or 10 points positive opening. Regarding Brent crude oil, it was reduced to $84 per barrel from above $85 per barrel during our market hours. Coming to sector specific, yesterday banking and financial sector got really under significant pressure. M&M Financial Services, HDFC, IndusInd Bank and HDFC Bank all got the huge long unwinding based on money control open interest data. However, there are some positive public sector bank info like Bank of Baroda released the partial Q4 update. They just released the credit and deposit growth. Regarding that, they posted highest ever credit growth 19% higher on year basis and the total credit reached over 21 lakh crore rupees. Similarly, the deposit growth increased over 15%. Some might say all these on PSU Bank was already factored in the price, but I disagree. The reason is they posted this phenomenal quarterly growth rate. Other than this, there are some companies that released the TCS results preview. At present, the expectation is that the revenue to increase only by less than 1%. So, any disruption in quarterly results can create a rally in IT stock price. In summary, US market flat, IT stocks looks to open positive, but don't know how much of the short covering it's still remaining. Regarding banks, in ADR, it's showing clearly negative. Again, it's same as IT. It's about how much of the profit booking left and how much market interpreting the Bank of Baroda results. Let's see. Then about the items to look out. Today there is a schedule for release of Chinese inflation data before our market opening. Again, those will have an impact on metal stocks. Then during our market hours, today in the afternoon, there is a schedule for Europe's retail sales data. So again, that can affect the end hour trading along with the Nifty expiry volatility. Finally, in the night, US EIA going to release their monthly energy outlook, and there is a schedule for a speech of FOMC member. However, all those data that scheduled to release in the night, we might only have the impact on the following day. Now coming to technical, Nifty forms a bearish shooting star candle and Bank Nifty forms a bearish engulfing pattern on the daily chart. Just for info, Nifty closed positive for the 6th consecutive day and Nifty closed above the 17,600 mark for the first time since March 8. So for sure, there will be a consolidation pending. In addition, if you see some previous candles, there was an uptrend and the gap up occurs followed by Nifty rallies to a new high. However, at the high point, Nifty loses strength and closed near to its day low. So at present, it shows the change of momentum to the bearishness. Still, next candle is the important one. For example, today if it opens below the last shooting star candle means, then it will form evening star candlestick pattern, which will be the more stronger confirmation of bearish trend reversal. In summary, there is a high possibility of minor downward correction. Regarding Bank Nifty, I don't need to say, as most of us know about the bearish engulfing pattern, it's a strong bearish reversal pattern. However, there is a one comforting thing here. I mean, the pattern forms with a very weak volume. So, it might be a false signal. Regarding the moving average and technical indicator summary, it's same as last Thursday closing. It's still a strong buy indication. Moving on, from option change in open interest, there are comparatively less new concentrated put options added at 17,200 to 17,600. However, huge number of call options added at 17,700 and 18,000. Then from overall options open interest data, the maximum call option open interest is present at 18,000 followed by 17,700. So 17,700 is the immediate resistance to break and 18,000 is the strong resistance for the expiry. In case of put options, 17,600 got the maximum put option open interest followed by 17,500. Since 17,600 got almost equal amount of call options, so 17,500 is the support we need to look out for today and 17,400 is the support for the expiry. Then in terms of Bank Nifty change in open interest, there are good number of new call options added at 41,000 and above, whereas small number of put options added below 41,000. Then from overall options open interest data, the maximum call option open interest is present at 41,000 followed by 41,500. So based on the opening, it looks like 41,000 or 41,500 is the resistance to break. Similarly, 40,000 got the maximum put option open interest with very less call option. So 40,000 is the immediate support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.